Hi there, traders. This is Brad Gilbert with today's trading action. All right, Jerome Powell out today, talking about the three inflation numbers or readings, falling, blah, blah, blah. Basically, they're getting closer to cutting interest rates. And the interest rate probability, I tell you what, no change this month or this next meeting, but 100% chance of cuts over the coming 6 to 9 months, right? So, you know what, the market has already sort of factored a bit of this in, but do not discount the strong tone that will develop from this. If we start to see weaker US numbers, that could accelerate the whole cutting cycle. But right now, if I look at the Fed's interest rate probability of where interest rates are going, right, you're going to see there's a very big chance here. Not a big chance. It's 100% factored in. Cuts September, November, December, January, they're happening. Right, we expected this to happen sort of by February, March this year, but you know what? The economy held up. Now it's starting to buckle, and they are ready to take action. Now, you haven't seen a lot of action on the currencies, especially if you're looking at the hourly charts, right? Because this is being factored in. So short term, yeah, the dollar is falling, but it's not going sort of mad. Like here, you might be thinking, well, the Aussie's pulling back, and so is the Kiwi, and they are on a short-term perspective. But when we look at the longer-term perspective, and this is more around interest rate values, it tells a different story, right? The Aussie is going up. So, you know what? As far as the interest rate differentials go between Australia and the US, I'd be looking to get long Aussie on any sort of decent pullbacks, right? And you know what? The Swiss National Bank, the ECB, the Fed, RBNZ, all sort of pretty much their interest rate guidance going forward is all the same. Cut, 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 right? So that's why these instruments I've circled aren't going anywhere. All right, let's just have a look what we're looking at today, right? So we've got a couple of really good numbers coming out. Now, the inflation numbers, we've been seeing some discombobulation on liquidity around the inflation numbers. So be careful trading short term, especially with pending orders, the Canadian inflation numbers, right? We know what's happening there. And if I just come back just quickly to the interest rate probability sort of chart, if we look at the Bank of Canada, right, it's just coming up here. It's 78% factored in that they will cut at the next meeting on the 24th of July in a couple of weeks. So this number today will, if we get weaker numbers, that'll go up into the 90s. If we get a lower number or a higher inflation number, well, that's going to reduce that, and that'll see the value of the CAD change according, but only short term, right? They are still on a cutting sort of cycle coming up starting in September. If not, looks like July. Weaker numbers will confirm that, and you'll see a weaker Canadian dollar. That's what that tells us, right? So you can be looking for that. Now, what is a better opportunity is a second tier number like the US retail sales figures. This will move the majors in a quite orderly fashion. So just be aware of that. So that, to me, could be the opportunity. And it might be time to start looking at long positions here, but definitely on the Aussie dollar, right, since the RBA is on hold. If we look at the Canadian dollar, just on an hourly and a daily perspective, right, dailies, it looks like it's trading sideways. Hourly, it's coming back up. Now, oil has been all over the place here, and that is sort of determining where the value of the CAD is. But as I said, if you look at the sort of general news, there's nothing dramatic coming out on the Canadian dollar. If we look at those interest rate probabilities, you can sort of focus in on where the raw nerve is. The market is loading up here for a cut. So stronger numbers, you'll see a bigger probably move than if it's a weaker number. Weaker number just confirms it. The Canadian dollar will weaken a bit, but you know what? It's already sort of there. Right. So that's what I'm sort of talking about. Stronger number could change the outlook here, maybe put it back a month, and that'll see the Canadian dollar rally. Right. So that's what you want to be looking for with that. And outside of that, that's pretty much the major focus. I'll be getting into the Canadian crosses on a daily perspective. Aussie CAD, it's ready to take off. Right. When you look at a Kiwi CAD back in the range, Euro CAD, well, you know what? The ECB are expected to start cutting, not this meeting this week, but the one after that and the next sort of 6 months. So I can't see euro going up that much against the CAD, right? So it's an interesting one, right? And the Bank of Canada is expected to start cutting soon. So we're going to get into a conundrum here where we're weighing up various central banks cutting. So you want to look at that perspective. Sterling CAD, or sterling, the Bank of England isn't expected to start cutting for like 3 to 4 months, right? If we get weaker inflation numbers, sterling CAD definitely room to the top side, as it is with Aussie CAD. And sterling CAD Swiss, well, very similar to Euro CAD. It is, central banks, similar path, not much in it. And the dollar yen, as CAD yen goes, it's really coming down to this BOJ intervention. That's going to sort of be, because Japanese interest rates are already at minus 0.1 forever. So that's a bit of a question mark there. Hard to call, but below the cloud would be a bit of an option if you're looking for a speculative trade. To me, Aussie CAD, sterling CAD are the two pairs to be watching on the inflation numbers. With the US retail sales figures, I'd be keeping a close eye on, the Aussie. To me, the Aussie is a buy. If we get stronger retail sales figures, it's not going to change the central bank. But what we might do is see a weaker Aussie. I'd be looking to buy Aussie on dips, just on an interest rate differential. And that's pretty much all she's got at the moment, right? Because dollar CAD, it's in the middle of nowhere just at the moment. All right, plenty of stuff coming up. This is the start of the week, Tuesday. There's data out Wednesday, Thursday, Friday. It's going to be busy. Tune up your charts and get ready to trade. Good luck and happy trading.